Welcome back to Living 808. Kay Mukai-Gao Vingel in Volkers, Honolulu is back for another Tuesday tradition. She's breaking down all the things real estate and tips on how to live Akamai.
We're so happy to have Nelson Oyadamari, Regional Branch Manager with Primary Residential Mortgage, joining us today. We want to discuss some topics that are relevant in real estate and mortgage lending. And, let's dive right into it.
Sure.
One hot topic affecting all condominium buyers relates to projects that are underinsured. So recap that issue for us, and how is it affecting financing?
Sure. It starts with the challenges that the insurance industry is facing. In the last few years, there's a lot of losses. So what that translates to is your insurance premiums, whether it be your auto insurance, your homeowner's insurance, your business insurance, your premiums, your costs have all gone up. And how that affects condominiums is some insurance companies have placed limits on their coverage for hurricane insurance, usually at $10 million. So what does this mean? If your building costs $50 million to replace, but the hurricane insurance is capped or limited to only $10 million, there's a gap. It's not fully insured. So if you're trying to get traditional financing through Fannie Mae or FHA, now these agencies require that the condominium be fully insured, which it's not. So you cannot get traditional financing.
But people are buying. I mean, there are alternative options, right?
There are non-traditional lenders that will lend on these buildings, although the interest rate might be a little higher.
Do you see this problem lasting forever, or is there some solution on the horizon?
There are. I've been in the lending industry for 30 years, and we've been so many hurdles, and we've seen so many hurdles, and they've all been, solved. And we think that either through legislation, we know that the state legislature is looking at this issue. Fannie Mae and FHA may change their guidelines to allow for underinsured buildings, or homeowners associations may decide to purchase additional insurance to fill that gap to be fully covered. But you know what that means? More
increased maintenance fees.
Exactly. So, but there are solutions coming. We don't know when.
Another issue is simply being able to qualify for a mortgage, especially for some of our clients that have cash, but documenting their income prevents them from actually being able to get the mortgage.
Sure. Every lending right now, especially with Fannie Mae and FHA, etc., it's really in the box. And if you don't fit in that box, you cannot get financing. So many people don't realize that we have alternative financing that looks at income differently, that looks at your total assets, and we can lend, not according to the Fannie Mae guidelines, but these alternate ways of documenting income. They just need to search out and make sure their mortgage lender understands that there are alternate financing programs out there. So especially for self-employed borrowers, we can have solutions. They just need to search out the lender that provides that.
The self-employed borrower always has a hard time. They have their own business. Sometimes if they work in an industry where they get paid different amounts based on if they're working weekends or if they're flight attendants or something and they're flying, it's variable, right?
Sure, and it may not, again, fit in the box. So
right.
We do have alternate financing.
Well, that's great. And lastly, interest rates. They've been creeping up a little bit, and we're wondering, what's your overall take on the interest rate environment?
Unfortunately, the interest rates have been increasing. Inflation has been increasing. The federal government says that the unemployment rate is going lower. So, we're all employed. Whether that's actually true or not, hard to say. But all of these things point to a stronger economy, which will not allow the Fed to lower their federal interest rates. So we don't see rates coming down anytime in the next few weeks. But we do see rates coming down, hopefully in the next quarter, maybe the fourth quarter of 2024, and people should be prepared for that.
Thank you. I'm glad we covered that hurricane insurance issue and talked about the things that were really affecting the interest rate environment. So we appreciate you being here.
Thank you very much, Kay.
If you have any questions for Nelson or his lending team, or want to attend one of their upcoming educational workshops, give us a call at 808-725-2000. and we promise to get you hooked up with them. Thank you for joining us, and we'll see you next Tuesday. Engel and Volkers Honolulu is here to help you live Akamai.
Great information, and there are so much more on the KHON2.com Living 808 tab. Just follow it to the Living Akamai section, and there's a lot of information there.
Thank you for that, John.